Well, we'll stay with our conversation as Nigerians are questioning why petrol still sells above 1,200 naira per litre. Yes, everyone is worried. Despite crude oil prices falling to around between $70 and $75 per barrel. WTI is even at 69 today, like I reported earlier. That's after the US and Iran peace deal. Consumers and businesses are demanding deeper fuel price quotes. Many Nigerians are expressing frustration over the continued high cost of petrol, despite a sharp decline in global crude oil prices. Crude oil prices fell down, like I said, since last week, their lowest level since the tensions between the United States and Israel escalated earlier this year. The decline followed the peace agreement reached between both countries, easing fears of disruption to global oil supply. Despite the drop in crude oil prices, petrol continues to sell for between 1,200 naira and 1,300 naira per litre across several parts of the country, sparking complaints from consumers and business owners who expect pump prices to fall significantly. Data from international oil market trackers shows that crude oil dropped from about $76 that's on Tuesday to around $73 on Wednesday. The decline extends a downward trend that began after the US-Iran peace deal was announced on June 14th. My guest is a professor of accounting, now University of Abuja. That's Professor Ofili Ugwudioha. Prof, thank you so much. It's good to see you. It's been a while, Prof. How are you today? And thanks for being on Business Nigeria.
Tolu, thank you very much for having me. This is a very interesting issue for discussion. And
I must thank you so much, Prof. But let me allow you then, Prof. What do you think? I don't know how much you are buying in Abuja at the moment, but as for me, in Lagos, I'm buying at 1,210 naira, and I'm worried. I remember that when fuel, crude oil was selling at about $120, I was buying at that same price. Why am I still buying at this same price? Can you make us understand what could be causing this, this ugly development, if you allow me?
Yeah, thank you very much. You see, the US-Iran war was actually a threat to global economy, not only Nigeria. And during that period, there was gain in some area. There was also some losses. In Nigeria, during the war, we had oil windfall income. So that was very, very significant. I think it was around 5 trillion, the windfall. It was a very big thing in Nigerian economy. Then, after the war, or after, during the ceasefire, that they have ceasefire, and again, a negotiation had come on board, and they have signed MOU, oil prices started going down. You remember during the war, it was going above $100 per barrel. Now it has come down to 73. As of today, at 73. Some are being sold for 60-something. But you know, Nigerian crude is one of the best crude in the world. Our own is selling at 73 as of today. That windfall has stopped as soon as the ceasefire stopped. If you look at it on positive side, Nigeria has gained a lot during the 3 months of the war. But now the crude oil prices have come down, and it will also impact on us. Though the impact will not affect the economy because our budget is $64 per barrel. But as of today, we are selling at $73 per barrel. It's still okay for us. At least Nigeria is safe and going well with the situation. Where we have problem is the sale of fuel. The PMS and of course the gas. But let me tell you why it's like that. You see, when around 2 weeks ago, when the ceasefire came, or when the ceasefire agreement was signed, then it is too short to actually impact on the fuel and gas sales in Nigeria. The reason is because if you have imported product at that high price of, assuming you imported at $100, and you are selling at $120, I'm just giving it as an example. So when the ceasefire comes, those products are still with you, so you have not disposed them. If you sell it very low, you will lose. Because it takes 1 month to 2 months, that's 30 days to 60 days, for any product that is imported to come into the country. Actually, we are feeling the impact because we don't have local refineries. We have one that is operated by an individual, but that cannot drive the market the way it should be. Because if one person is selling a product, it is a monopolistic market, which means the monopoly thrives here. So it will be short to bring down the price drastically down to around 800 or 700 and something, which we were buying before the war. But it will gradually trickle down, and the prices will come down if the war does not start again, because that MOU is to last for 60 days. Well, nobody knows what will happen after the 60 days. However, the problem we have with Nigerian businessmen is that even when the price comes down, even when the product they imported into the country comes down very low, they will still not bring it down. And this is why I support government monitoring of the market, because it's impacting on government. Even though some people or marketers are trying to protect, but if you protest over this, you should show reasons why you should protest over it. If you say for today it cannot come down drastically because of this and that, yes, but after today and tomorrow and thereabout, it has to come down. So that's the situation on ground.
It's a good start, Prof. I like that, making that clear and letting us understand all of this, where we started from and everything. But how do you think this would impact inflation going forward? You will remember, or you would agree with me, that inflation rate spiked at least a little since when this happened. We're buying fuel at about 700 to 800 naira, and it jumped to about 1,300 naira, in some cases even above that, depending on where you're buying. Now that we see that decline, we already saw that affecting inflation. What about the expected impact on inflation moving forward?
Yeah, the expected impact on inflation that is currently going on here is also going to be very minimal, because, like I said, the price will continue coming down gradually. It will not be boom. And because of that, the inflation will just reduce minimally as well. You have seen that from May NBS analysis of the inflation, it was a bit more than what it used to be. Inflation never actually come down. But I would like to tell you that the causes of the inflation, the fuel, does not cost more than 1 to 2%. The major cause of inflation in Nigeria is actually the exchange rate. Because when you exchange your goods and services in dollar, and the dollar rate is very high, you cannot expect somebody who bought something for 1,500 exchange per dollar, you cannot expect him to come now and sell it for less than 1,600.
Yeah.
Because he has to make his own gain. So the major problem we have is the exchange rate. And I continue to say in every forum that if dollar naira exchange does not narrow itself significantly, it is going to be a problem, and it will continue to be a problem of this administration. All other reforms they are making, they are fine, but this one actually destroyed most of the things, most of the gains Nigerians will gain. So considering the fact that up to 80% or 90% of what we consume in this country is imported, if it is like this, the major cause of inflation is the exchange rate. Other things can be inputted into it, but not so significant.
So when we have this kind of situation, what would you be expecting, or what is expected of the monetary policy? Because all of this is what will shape decisions. Global concerns, inflation, energy costs, food prices, we can go on and on.
Yeah, what is expected of the monetary policy is to look at also the fiscal policy, to look at the fiscal policy of the government, and to be able to work in tandem with the fiscal policy. Because the monetary policy of a government is meant to service the fiscal policy. For instance, if government intends to alleviate poverty in this country, and the cost of goods and services are going high, so you are not alleviating anything. If government goes ahead to give some palliative to people, the person will take what you give him for 1 month. And what happens after that month? So that's the problem we're having. The major thing now is that the monetary policy should look at the production or manufacturing, which is a part of our physical aspect of the economy. They should also look at the provision of social services to people, like hospital, like education, like all other things. If they should look at this and also look at the affordability of these things, then the CBN would not have retained the MPR, which they have done. What we expect from them is to reduce it, because it heightens the borrowing rate, so manufacturers cannot borrow at 30% and still make profit. Then commercial activities cannot thrive well, because if they buy a good for 1,500, they cannot sell it to you or to me for 1,200. So these are the issues. The monetary policy is supposed to look at the fiscal policy of the government and find a way to reduce them. So that's the issue.
So are you talking about the handshake? Sorry. Are you talking about the handshake now between the fiscal side and the monetary side? Would you say that it's not better than what we used to have before now? What was your reaction? Prof, can you hear me?
No, can you come again?
Okay, now you talked about the monetary side and the fiscal side. And now I'm asking you, do you think that there is that necessary synergy? Because many analysts like you have agreed that it is better than what we used to have before.
Well, Tolu, let me tell you, the primary aim of government is to provide socio-economic services. If that is the primary aim, and the goods you were buying 3 years ago for 400 naira is now 1,500. So how can you tell me they are working in tandem? Because if government wants to reduce inflation, One of the key things is the monetary policy. And that monetary policy is tied to Naira-dollar exchange. So I don't think, from my own perspective, I don't think they have done enough. Take, for instance, a manufacturer who wants to come to Nigeria and his borrowing rate is around 30% of the money he borrowed. And he will do his own feasibility studies for Nigeria and do for Ghana. Maybe the borrowing rate in Ghana is around 15–20%. How can the person come here? Because this thing will raise the cost of his good when he produces, thereby making it difficult for him to sell in the international market. So these are the issues, because it's not just what we think. We are talking about what is seen globally. And I always say that IMF is causing a lot of problems for Nigeria. But I also say that IMF advice is purely advisory. It's not compulsory that you must take it. You have done all of that things IMF suggested. They are not injurious to the economy. The one of the valuation of Nigerian Naira is very injurious because we are not producing. And if we are not producing, what do? You have to do something that will encourage production. You have to do something that will encourage economic activities. The actual economic growth that they are computing is not telling on the micro level, because everybody is impacted upon negatively as a result of this problem we have. If the Naira exchange was not touched, I tell you that every human being on earth will praise this government, even those who are criticizing them. But bringing Naira exchange rate from 400 to 1,005, every other thing you think Nigeria will gain will not actually work, because they have to live, they have to survive. And the meaning of that is that many people are thrown out of purchasing power significantly.
Prof, you will agree with me that we were at a point in this country where the currency was not appropriately priced. The central bank continued to defend the Naira, defend the currency with a lot of currency, a lot of Naira, money that we did not have. We even borrowed at a point and started printing money in ways and means to defend the currency. Would you say that was better than the government liberalizing the exchange rate? We have 3 minutes, and I want you to explain why you would say that is better than allowing the currency to market forces to run the exchange rate.
Okay. The ways and means does not come because of Naira dollar issue.
But we kept on defending our currency.
Means,
we needed money.
Let me come.
Yes, go ahead, Prof. Go ahead, Prof.
Yeah, ways and means does not necessarily come because of Naira stability or instability.
Yeah.
It is no, let me tell you now.
Go ahead, Prof.
So if you check how much the dollar rate was 400 Naira 3 years ago, and now it is 1,500, is how many? It's 400% devaluation. And that devaluation affects everybody. Then the issue of ways and means is not even necessary, because if I'm telling you that the Nigerian workers that were receiving 30,000 4 years ago were better than Nigerian workers that are receiving 70,000 because of this devaluation. So the ways and means is not the answer, because they can maintain the currency and make the country viable. If you look at other government, are you going to tell me that this policy is better than all other government monetary policy? That all governments since Naira emergence continue to manage the naira in the way that it will not impact negatively on the Nigerian populace. Because a country that is not producing does not devalue its currency. They didn't look at this angle because Nigeria has up to 80% or 90% of the goods consumed in Nigeria are imported. And you devalue it by this way, it all means the goods and services will be 4 times more than what it was in the past.
Okay, Prof, we are going to have a conversation on this currency issue someday, and it's going to be all that day the conversation will be around this, because I also, as a business journalist, am privy to some information of what was happening to our economy before this happened. But like I said, we'll have this conversation some other time. We already made more sense. I've listened to you, our Nigerians have heard you, all our viewers have heard you, but we'll have that conversation again. It's always interesting having Professor Ofili Ugwudioha, but that's our time today. Professor of Accounting, now University of Nigeria, Abuja. Thank you so much, Prof. Hope to see you soon, and we'll have our conversation strictly on our currency and where it stands, where we were before, so that maybe you make us understand this better than this. Thank you, Prof, for your time.
Thank you very much.
Yes, my Prof.
Thank you for having me.
Yes, my Prof. Thank you, Prof. Thank you so much. Yeah,